Welcome to Breaking News to Trading Moves. We're looking at a headline today that involves Elon Musk, Sam Altman, and a dollar figure that is, frankly, difficult to wrap your head around.
It is. This is a situation where the legal world and the market are colliding in a very direct way.
The headline is pretty much unavoidable. Elon Musk is escalating his legal battle against OpenAI and, of course, Microsoft. But what really jumps out is the number. We're not talking a few $1,000,000 in some contract dispute. We're talking about damages being sought that could reach up to $134 billion.
Yeah, that is the figure on the table. And to put that into perspective, that's larger than the GDP of many countries. Musk is asking a federal court for that amount, arguing that OpenAI and Microsoft earned what the legal filing calls wrongful gains.
$134 billion? It almost sounds like a made-up number. How do you even calculate that? Is this just a tactic to get attention?
It's certainly designed to grab attention, but there is a methodology behind it in the filing. It ties back to the valuation increase of OpenAI. The argument is that OpenAI's massive valuation was built on Musk's early support and the nonprofit status that attracted all that top talent.
Right.
So Musk is arguing that by pivoting to a for-profit model, this capped profit thing under Microsoft's wing, they basically invalidated the whole premise of his investment. He wants the value they created from that pivot returned.
And that brings us to that specific phrase in the complaint, mission drift. It sounds like corporate speak, but in a legal sense, that seems to be the weapon here.
It's the core of the whole allegation. Mission drift in this context just means OpenAI abandoned its original goal, to build safe AGI for the benefit of humanity as a nonprofit. The lawsuit argues it became a closed-source subsidiary of Microsoft instead.
So it's a bit like donating to a charity to save the whales and then finding out 5 years later it's turned into a sushi restaurant chain using your money.
That's a colorful way to put it. But yeah, that's the spirit of the argument. Musk is saying this shift resulted in those wrongful gains for Microsoft and OpenAI's leadership. And we've got a jury trial scheduled for April 2026 in Oakland.
April 2026. That feels like a lifetime away in the AI world. Why does a trial date 2 years from now matter to someone looking at their portfolio today?
Because markets hate unresolved questions. This is really about governance and control for the entire AI sector. It brings up the question, who actually owns the upside of artificial intelligence? If the courts decide OpenAI's pivot was illegal, it threatens the whole Microsoft-OpenAI partnership.
It's an overhang.
It's a big overhang. It highlights the legal risks that are sitting right on top of the AI monetization story. Even though the trial is down the road, this uncertainty influences valuations right now.
You start to ask, if you're an enterprise customer, do you sign a 10-year deal with a company that might have its charter revoked?
Exactly. Or be on the hook for $100 billion. That hesitation impacts deal velocity. It influences how quickly these big AI projects get signed.
Okay, so before we look at specific stocks, the winners and losers here, what are the signals we should be monitoring?
I'd say there are three main things. First, watch the court rulings on the damages theories. If the judge lets this $134 billion theory stand and move forward, the risk goes up. If they strike it down, the market will probably just shrug it off.
So the size of the claim matters. What's the second thing?
Watch for any changes in OpenAI's partner postures. Look at the contracts. If major partners start structuring deals that let them exit easily, or if they stop using the OpenAI brand exclusively, that's a sign they're hedging their bets.
And number three,
whether this sparks copycat challenges. If this lawsuit gets any traction, we could see similar challenges across other AI partnerships. Think about all the other research labs that pivoted to commercial models. If Musk wins, the floodgates could open.
So it sets the stage for a messy couple of years. But like you said, money moves fast. If there's fear around OpenAI and Microsoft, that capital has to go somewhere else. Let's talk about the winners. Who catches the overflow?
Well, when there's turbulence with a market leader, the immediate beneficiaries are always the alternatives. We can break the potential winners down into three categories. The first one is pretty obvious. AI platform alternatives.
The Plan B options.
Right. The logic is simple. When a key AI stack faces legal scrutiny, enterprises get nervous. CIOs are risk-averse. They want to diversify.
So a CTO is thinking, I can't put all my eggs in the OpenAI basket if someone is trying to light the basket on fire.
That's exactly the conversation happening in boardrooms. This shifts leverage to other major ecosystems. And the first name on that list has to be Alphabet.
Google. Ticker GOGL.
Yep, GOGL. Alphabet has been playing catch-up on perception, but they have a complete integrated ecosystem. If customers are wary of the OpenAI Microsoft stability, Alphabet is the natural place to look. They have the chips, the cloud, the model. It's a one-stop shop that isn't facing this kind of lawsuit.
It's kind of funny that Google is the safe bet here, but in this specific context, they do look stable. Who else?
Meta Platforms, ticker META.
This is a different kind of play, though, isn't it? They aren't selling a closed API like OpenAI.
Correct. META has taken a very different path with their open weights llama models. For companies worried about the proprietary black box issues at the center of this lawsuit, Meta's approach looks very attractive. If you build on llama, you have more control. You aren't as subject to that mission drift problem because you can run the model yourself.
It's the open source defense. We can't change the rules on you because you have the code.
In a sense, yes, it removes some of that counterparty risk. And the third name in this group is Amazon, ticker AMZN.
Amazon, AMZN. They always seem to play the neutral party in these cloud wars.
They do, but they're also heavily invested in Anthropic, which is OpenAI's main rival on model performance. Amazon benefits when the market wants a plan B or just wants to spread its bets. If you're on Azure and worried about the Microsoft entanglement, moving workloads to AWS is a logical hedge.
Okay, so that's the diversification trade. But this lawsuit is huge and complex. That sounds expensive for everyone involved.
It's incredibly expensive, and that brings us to our second category of winners, legal analytics and compliance.
The people selling the picks and shovels for the courtroom fight.
Exactly. High-profile lawsuits like this drive higher demand for litigation support, legal research, all of it. When corporate legal teams see a suit of this size, they start checking their own contracts, their own IP exposure.
So who are the public companies that do that?
The leader is Thomson Reuters, ticker TRI.
They own Westlaw, I believe.
Yes, that's TRI. They own Westlaw and a host of other legal tech tools. As legal scrutiny in AI ramps up, their products become essential.
And I imagine the same applies to their main competitor.
It does. RELX PLC, ticker RELX. They own LexisNexis. It's a duopoly, really. A lawsuit of this magnitude is basically a massive marketing campaign for their services.
The one sector that wins no matter who's right or wrong. Okay, let's move to the third category of winners. We talked about governance. If companies are worried that OpenAI is playing fast and loose, that often leads to a focus on security.
It connects right back to the boardroom. When AI governance is a hot topic because of a lawsuit, boards start asking, where is our data? Is it going into these models?
You want to lock things down.
Precisely. This moves budgets toward monitoring, data controls, and policy enforcement. The winner here is CrowdStrike Holdings, ticker CRWD.
CRWD, CrowdStrike Fix, because they're securing the endpoint where the data actually lives.
Yes. As companies use more AI, securing that infrastructure is critical. The governance aspect of the Musk suit reminds everyone that control is key.
And the other big player there?
Palo Alto Networks, ticker PANW. That's PANW. They're a broad cybersecurity platform. The logic is that as the Wild West of AI faces legal challenges, companies offering structure and control will see more business. If you can't trust the AI provider, you have to trust your security provider.
All right, so we have the alternatives like Google, the legal researchers like Thomson Reuters, and the security guards like Palo Alto. Those are the winners. Now we have to look at the other side, the losers.
These are the companies facing pressure or sentiment hits because of the litigation. We have to start with the most obvious one, direct OpenAI economics exposure.
The ones in the blast radius.
The companies most tightly bound to OpenAI. Any risk to OpenAI's structure pressures the closest public beneficiaries.
And the biggest name there is, of course, Microsoft, ticker MSFT.
They're a named defendant, but beyond just damages, their entire AI strategy is so deeply integrated with OpenAI, Copilot, Azure AI. It's all built on that partnership.
It introduces a variable that investors just hate, which is legal uncertainty. Microsoft is supposed to be a safe haven. This makes it look a little riskier.
Yeah, that's it. And in that same bucket, we have Oracle, ticker ORCL.
Yeah, Oracle isn't being sued, are they?
No, ORCL is not being sued. But Oracle partnered with Microsoft and OpenAI on infrastructure to handle compute overflow. They're part of that same supply chain. If the main entity, OpenAI, is distracted by a lawsuit, it affects the partners providing the plumbing.
Let's look at hardware. This one feels a little counterintuitive because you'd think Musk building his own AI would mean more chip buying. But you have the AI compute supply chain. listed as a potential loser.
This is where market sentiment can get very fragile. We're talking about the hardware that powers AI, so NVIDIA and Supermicro.
NVIDIA, ticker NVDA.
NVDA is the bellwether. The logic here is all about ordering patterns. If this litigation causes uncertainty at Microsoft and OpenAI, who are some of the biggest chip buyers in the world, and that leads to even a temporary slowdown in expanding their infrastructure, well, the market gets spooked.
So it's not that anyone stops buying chips. It's that the biggest buyer, Microsoft, might just tap the brakes while they figure out their legal situation.
Exactly, or just that the market fears they will. For a stock price for perfection like NVIDIA, any wobble in growth expectations can hit the stock price.
And Supermicro Computer's in the same position. Ticker SMCI.
Yep, SMCI. They build the servers the chips go into. They're tied to the build-out cycle. If that build-out faces a governance check, the server suppliers face a sentiment headwind. It's a chain reaction.
That makes sense. It's more about sentiment than anything fundamental, but sentiment moves prices. Finally, let's talk software. The linked enterprise apps.
These are the platforms that have marketed their workflows as being very tightly linked to OpenAI. They hitched their wagon to this particular horse.
And now the horse is in court.
Right. Companies like Salesforce, ticker CRM.
Salesforce has been pushing their Einstein AI, which uses OpenAI heavily on the back end for a lot of its features.
They've integrated it very deeply, so if customers start to fear roadmap volatility or pricing changes because of the lawsuit, Salesforce looks less attractive in the short term.
And the other name you're watching there.
ServiceNow, ticker NOW. Similar story. NOW is a huge workflow platform. They moved fast to integrate generative AI. Sentiment can get hit if the underlying engine OpenAI is making headlines for legal reasons instead of tech ones. It's kind of guilty by association.
It's platform risk. You built your house on someone else's land. If the landlord gets sued, you start to worry about your lease.
So we've covered the winners, the diversifiers, and the lawyers. We've covered the losers, the direct partners, and the apps that depend on them. We know the trial is set for 2026. As we wrap up, what's the main takeaway for today?
The summary is that while the trial is years away, the overhang is here now. This lawsuit is influencing valuations and negotiations today. It's a cloud over the sector that investors have to factor in. You can't just ignore it until 2026 because the market is pricing in the risk of a bad outcome right now.
And going back to your point about copycats, that feels like the real wild card here.
It is. Could this specific case trigger a series of other governance challenges? If Musk's theory about mission drift gets any traction in the courts, we might see other early backers of other projects asking similar questions. It challenges that whole open source to closed profit pipeline that's fueled so much of this boom. It could open a door that a lot of companies would rather keep shut. We'll be watching those court filings closely.
The entire industry will be.
Before we sign off, a mandatory disclaimer for our listeners.
Yeah.
This episode is not financial advice or a recommendation to buy or sell any assets. It is purely the opinion of the authors based on the provided text.
Always do your own research.
Thanks for listening to Breaking News to Trading Moves. We'll catch you on the next one.